Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is March 6, 2024. In this video, I take a look at the Euro versus US dollar, the sterling versus US dollar, and the dollar versus yen. From a technical perspective, there's a lot of fundamental news going on, but I'll focus mostly on the technicals. So let's get started. First off, we do have the Chancellor of the Exchequer out of the UK, Hunt, giving his budget, and so far it seems it's sort of in line with expectations. We've seen gilt yields move a little bit higher, with the 10-year now up about 4.5 basis points. The 2-year is up about 3.5 basis points, so it can't be all that bad. The pound versus US dollar is trading down and up in a fairly narrow trading range, but it is higher on the day, so that's ongoing. We're also going to have a Bank of Canada rate decision later today. I'm not going to talk about the Canadian dollar in this report, but will in another report after this. Then we have the Fed chair testimony. His prepared remarks were released at 8:30 a.m. and that came pretty much in line with what has been said so far from about keeping. Waiting for inflation to be on a sustained path to 2% before cutting rates, things like that, which are congruent with his prior comments. We will see what the question and answer session brings out of him. So that's a risk factor in trading here today. We're seeing stocks move higher, with the Dow up about 160 points currently at the moment, and the S&P and NASDAQ are also higher. The NASDAQ is leading the way with a gain of about 160 points on the day, reversing declines from it yesterday. So that's the sort of overall story. So let's get into the technicals that are driving currency pairs like the Euro versus US dollar. And I'll start by taking a look at the 4-hour chart, and you can see that the Euro versus US dollar is making new highs for the trading week, which this is the start of the trading week. That's dashed lined right here, and we moved higher earlier in the week and then sort of consolidated up and down in trading yesterday. We did move finally above the 38.2% retracement of the move down from this high right here, going back to the end of December to the low price that we saw in February. Getting above the 38.2% retracement is always a requirement for me, and the last couple times the price has moved up to that level and found willing sellers against it. And yesterday's break looked like we were finally breaking out, but no, that failed, and the market started to rotate back to the downside. We have since moved back above that 38.2% retracement level, which is good news again for the buyers. At least it shows that they have a willingness to move higher and extend above the minimum retracement level. And the current 4-hour bar has been finding support against that level right there. So we're seeing increased confidence to the upside. The next target comes in at 1.0887. That was the high price, not from last week, but the prior week. And then we look toward the 50% retracement level of this same move to the downside. That level comes in at 1.09165. Risk for traders now is the 38.2% retracement. We've got to stay above that level in order to keep the bullish bias from a technical perspective going to the upside for this currency pair. So be aware of that this level is the risk level, 1.0864. Let's take a look at the dollar versus yen next, and again we'll look at the 4-hour chart to get a view here. And what we're seeing is the dollar is moving lower as well. We came down yesterday. Actually I'll keep it here. We came down yesterday and tested the low of this yellow swing area with these two solid red lines here. That area was defined way back here. Going back to September, October, November, all these different highs through here. You can see all of them. And then we had some lows as well. We broke below it a couple times, but then reestablished a support or resistance against the level and moved higher, traded above it here, and then fell below the level before finally giving up the ghost and coming all the way to the downside. It wasn't until a few weeks ago that the price was able to get back to this area, and we've been trading above and below it since that time. We did have some failed break here. We had a failed break here last week a couple times, but most of the price action has been above this swing area over the last 1, 2, 3, 4 or so trading weeks until Today, we finally see a break below that, the low of that swing area at 149.70. There's some chatter that maybe the Bank of Japan might be looking toward hiking rates, and that helped to push the dollar to the downside, the yen to the upside. And the next target comes against the 200 bar moving average on the 4-hour chart at 149.14. And then we'll look at the 38.2% retracement of the last swing move to the upside. That's just from this low to this high right here. The 38.2% retracement comes in at 148.96. We need to get below that level to show that, we've got some downside momentum going here for this pair. Let's keep it going. So getting below the 200 bar moving average, getting below the 38.2% retracement just of this last move to the upside is the required selling for this pair if it's going to start to show some further downside momentum in the dollar versus yen. So be aware of that. If we do hold support against this level, and by the way, it was the low price from last week or near the low price from last week, so there may be some support buyers leaning against this level. It stops below, and it was a low price here. Then we're ultimately, if the price is going to go higher, we need to start building back into this 149.70 to 150.15 level and getting above that level on the 100 bar moving average on the top side. So that's the challenges for the dollar versus yen from a technical perspective. Finally, let's take a look at the sterling versus US dollars. Budget process continues, and what we've seen is the price high today has come up toward the price high from yesterday's trade. But I haven't been able to get above that level at 127.34. We are more into the meat of it, I guess, of this 125.94 up to 128 type area of this box here. In fact, moving toward the upper end of that range here in trading here today. So the tilt is more to the upside. A couple days ago, or last week, I should say, and at the beginning of this week, we moved back above the 200 bar moving average on the 4-hour chart, and on Monday in the first few hours of trading, we did hold support against that level before moving to the upside, so it's more positive. We moved above the 61.8% retracement of this move to the downside. After testing it a few weeks ago, we finally were able to break above it in trading, yesterday and today, but we need to stay above that level now. That level comes in at 1.2709. We're currently trading 1.27195 with all the budget stuff going on right now. And so there is a possibility that we do have some volatility above and below that level. But so far, we're trying to hold support against that level. We'll see if that can continue. We can extend above the 127.34 level and keep this bullish run going in this pair. What I do like here at the 50% is that we did base against that level in trading during yesterday's trade. So that's a good news for the upside here in the sterling versus US dollar. So there you have it. A look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.